Well, I'm getting tired of this market, and the fact that I'm getting tired of all people of this market, a long-term investor, somebody that doesn't focus on the day-to-day at all, and I'm getting tired of this market, makes me realize that most of you guys watching this video are probably also either already tired of this market or you're getting tired of this market. It seems like anytime we get any sort of bullish momentum going, it just sells off within days or hours even. Think about when we got the catalyst. The CPI data came out just a couple days ago. It provided a big green candle, big green pop in the morning of the trading day before selling off in hours in the afternoon and finishing the day red. Even just yesterday, we had a marvelous green day. The indices all up over 1%. And then today, it all sells off when we lost all of our gains and then some. I'm seriously getting tired of this market. So what is causing all this? Why does the market just seem like it won't ever go up? In my eyes, the markets right now are kind of like that dizzy fighter that just is going to take one last knockout punch before everything just crumbles. The markets have been blindsided more in the last 2 to 3 years than any other 2 to 3 year time span in the history of the stock market, the history of the crypto markets, the history of the housing markets. Think about it. We had COVID. What spurred from COVID? Unemployment concerns, supply chain concerns, GDP growth concerns. And then after that, we have inflation, interest rate worries, monetary policy, and then whack, another big bear catalyst comes out of nowhere with Russia invading Ukraine, which spurred even more tensions, more inflation worries, which added to the fears of interest rates going up even more because it sent commodity prices soaring, making inflation soar right alongside it. This even brought back supply chain fears as Russia and Ukraine are both pretty big exporters of energy and commodities. And even beyond that, the markets have started to worry about the politics in Washington, the politics around the world. Who's going to be getting involved with this war? What's going to come of this war? Is this war going to end anytime soon? There's just so much stuff right now that the markets are worrying about. In fact, since November of last year, the NASDAQ is down 16%. That is horrible return. But even this is BS. Everybody watching this video right now knows that the vast majority of stocks have been in a downtrend for over a year now. Since February of 2021, not just November and December of last year. Only a handful of the largest companies in the world were what was holding the markets together throughout 2021. If it weren't for those largest companies in the world, the mega cap stocks, these indices would have been way down. Adding to it, the amount of bullish sentiment in the market today is at a 30-year low. Right now, less people are bullish about the next 6 months in the stock market than there were people bullish about the next 6 months in the stock market during COVID, during the financial crisis and the housing bubble, and during the tech bubble. Right now, there are less bulls in the market than in any 3 of those catalysts. I need to give credit to the American Association of Individual Investors, who has conducted this bullish versus bearish survey every year, every month, going back to 1987. And thanks to them, I actually have pulled up data on an Excel spreadsheet, and we can look at the last times bullish sentiment got this low. I took the data I was given and sorted the bullish sentiment from smallest to largest to see other times in history where bullish sentiment got to low levels like this. Right now, as I'm recording this video on April 14th, we have the 9th lowest overall bullish sentiment dating back throughout the history of this survey. Again, dating back to 1987, this is the 9th lowest reading we have had. You can see by looking at this data, only 15.84% of respondees to this survey are bullish on the stock market going into the next 6 months. That is ridiculously low. So what I've decided to do is I actually mapped out every time bullish sentiment got under 20% with this survey. And I sent that out to my Discord server. By the way, you can join my Discord server for $1 per month. You can literally pay me a pack of ramen and you'll get access to my Discord server. So please join. I'll have a link to my Patreon in the pinned comment down below. Well, that's besides the point. Let's look at this chart. I've mapped out again the other times in history where bullish sentiment has dropped below 20% in this survey. Each of these red dots is when this has been the case. And you can see that more times than not, investors have been wrong about their sentiment going into the next 6 months. For example, around 1988 and 1990, that was when a lot of these data points came from. But you can see, especially in 1988, when people were the most bearish and the least bullish about the markets, that was actually the low. Same thing goes for 1990. The bulk of these data points came at the lows of the market, and the market kept roaring higher. Now, I do realize that on this chart, there's at least one exception depicted here where investor sentiment was correct, that the next 6 months to a year in the stock market was going to be abysmal. And that came in 2008 or 2009 here with this red dot here, where you can see the markets crashed shortly after that market survey came out. But following that were a few additional data points from the spreadsheet that literally line up with almost the exact market bottom that was set in 2009 from the housing crisis and the financial crisis. More of these investor sentiment lows came in 2016 at the bottom. And right now, obviously, you can see we've gotten 2 recent data points of historically low bullish sentiment in the markets. So, is history going to repeat itself? Nobody knows for sure. But if history is any indication, generally, whenever bullish sentiment is at its lowest, that's a pretty dang good time to be a buyer. Let me go back to that article from the American Association of Individual Investors. You can see in this article, they say historically the S&P 500 has gone on to realize above average and above median returns during the 6 and 12-month periods following unusually low readings for bullish sentiment and for the bull-bear spread. Right now, we are at unusually low readings for bullish sentiment. They also say unusually high bearish sentiment readings historically have also been followed by above average and above median 6 months returns for the S&P 500. So again, is this going to hold true? Is this a good buying opportunity now? Nobody knows for sure, which is why everybody should come up with their own thesis. But if history is any indication, it would tell us that right now is probably a very good buying opportunity. So when will this end? When will this wall of worry start to crumble? Well, again, it's another thing that nobody knows for certain. But I'm going to tell you this right now. I feel personally, this is my opinion, I'm not a financial advisor, I feel personally that we are very, very close to another market bottom. I feel that right now is a great time to be a buyer in this stock market. So if you've thought about giving up, don't give up now. Continue to work the extra hours at work. Find a second job and deploy as much capital as you can into the markets right now if you agree with what I am saying. Your future self is going to thank you for doing so. Now, there are a few different reasons why I'm saying what I'm saying today. First of all, it has to do with valuations in the stock market. For a long time now, the vast majority of stocks have been undervalued and have reached undervalued levels. But as I covered earlier in the video, there's still a handful of equities that have been propping up the stock market. Typically, the mega cap are the largest companies in the world. We can see small cap valuations right now are at historical lows. Looking back at history, small cap valuations have only been this low a handful of times, once which was during the COVID pandemic. The last time would have been the 08-09 financial crisis. That is pretty much it. Maybe towards the end of 2018, but even right now, it looks like we're lower than we ever were at the end of 2018. So dating back 20-something years, there are only 2 cases in history where small cap valuations have been this low. Same thing with the mid caps. Although they're not as undervalued, they're still undervalued. Mid cap valuations were this low during the COVID pandemic, during the end of 2018, during the end of 2011, and then again during the financial crisis and the housing bubble. While we're looking at these charts, I actually should point this out. Back during the financial crisis and the housing bubble, there were massive fears about a double dip recession, which isn't being talked about very much right now, but it's the same exact thing that's going on. People are fearful of a double dip recession. They fear that the U.S. economy is going to go into another recession here shortly over the coming 12 months or so. It was the same case in '08 and '09. Specifically in 2010, going into 2011 and 2012 was when this was happening. You can actually see this depicted on these valuation charts. You can see how valuations recovered relatively quickly from the housing bubble, bounced back pretty dang quickly. But then valuations fell because people were worried about a double dip recession. This is almost identical to what I feel we're seeing now, where because of the COVID pandemic, valuations dropped significantly low, but they bounced back very fast, even faster than during the financial crisis. But now we're seeing those valuations come back down to undervalued levels because people are worried about a coming recession, a double dip recession. People forget that because of the COVID pandemic, our economy has already been in a recession not too long ago. People forget that because it was such a short-lived recession. But beyond what I have already mentioned, coming out of the COVID pandemic, we can see that valuations reached very unsustainable levels. Forward PEs reached levels that we have not seen at all in history. Valuations got stretched way too high. This is exactly the reason that on this YouTube channel, I have been saying the stock market needs a reset. Somebody needs to hit the reset button on the stock market for months now. I have been saying this, and finally, it's happening. Small caps and mid caps, like I've already covered, are at undervalued levels. But looking at the large caps, their valuations have started to come down, but they're still historically overvalued. This is why I say we're close. I could definitely see small caps and mid caps reversing now, while the large cap valuations crumble back down a little bit more. Typically in history, this is actually exactly what happens. The small caps and the mid cap stocks recover first whenever the markets are ready to go back risk on. This often leaves investors really confused, like why are the small, dangerous, risky plays going up when large caps are going down? That's a fake run, small caps are going to fall back down, but that's often a mistake that a lot of investors make. And I could actually pull it up in this video, but I won't for the sake of time. But small caps have actually started to outperform the S&P 500, the NASDAQ, etc., the large cap indices. The small caps are outperforming right now. The second reason I feel that we're close to a market bottom is because inflation has likely peaked with this last CPI data that came out. I say this because asset prices, which are typically the first to rise and the first to fall in either inflationary or deflationary time periods, have started to cool off and come back down. In particular, I'm talking about the price of used vehicles, and I'm talking about the price of housing. Both of those items are starting to come back down in price, which is a good thing to combat inflation moving forward. Furthermore, in the upcoming CPI data releases, it's going to be very, very hard for inflation to keep increasing month after month. Do I think inflation's going away? Absolutely not. I think inflation is going to stay here, but I think it's going to cool off. Instead of going up 8.4%, I think it'll go up 7% year over year, 5% year over year, 4% year over year, you name it. Because dating back to last year, again, these are year over year comparisons, you would have to have inflation go up 7%. On top of the 7%, prices have already gone up from last year's readings. That's a really hard thing to do. And when we look at everything the market is worrying about right now, I've named them off in this video. The supply chain issues, interest rates going up, the economy in general, monetary policy. I feel that inflation is the root cause of every single one of the market's current worries. And as soon as the inflation fears go away, naturally that should alleviate the worries that the market has right now, the fears that the market has right now. You can think of it kind of as a house of cards, where if you pull the inflation card out, it's going to send all of the worries crumbling down and the markets are going to forget about everything. And that is when I feel that the markets are going to bounce back up. I think the bounce back up is going to be very vicious because the amount of short sellers in the markets right now. That's going to fuel the recovery, the bounce back in the stock market. So to wrap this all up, I think we're nearing the end of our buying opportunities. Some of you might be saying, thank God. Some of you might wish that the buying opportunities would continue. Either way, I feel that it's coming to an end, whether you like it or not. Doesn't mean I'm going to be right, but that's what I feel is going to happen. I feel that after the April CPI data comes out, the market's worries are going to crumble down. The house of cards, the house of worries is going to fall. which I think is going to result in the markets going up very, very quickly. So again, I reiterate, if you've been working the extra hours or you've been working a second job so you can add to your portfolio, please continue to do that. Don't get scared out of the markets now. You've come so dang far. We are so dang close to a market bottom. Keep doing what you're doing. Again, I strongly believe that your future self is going to thank you later down the road. With that, guys, if you're new here or returning and not yet subscribed, I would greatly appreciate hitting that subscribe button down below. It helps me out tremendously. Also, hit the like button if you enjoy this type of content. And feel free to share this video with anybody you might feel would really enjoy this video or needs to hear what I said in this video. With that, I hope you have a great rest of your day. Have a blessed rest of your day. Have a blessed Easter. And I'll be back with a brand new video next week. Peace out.